Hi everyone! Welcome back to our channel. Today we're diving into the world of credit cards. You know, those little plastic rectangles that seem to magically make things appear in your hands? Well, it's not exactly magic, but they can certainly feel that way sometimes. Essentially, a credit card is like a short-term loan from a bank or credit card company. They allow you to buy things now and pay for them later. It's incredibly convenient for many situations. You can use them for online shopping, booking flights, or even reserving a hotel room. And of course, they're handy for grabbing groceries when you're short on cash. But, and this is a big but, it's crucial to use credit cards responsibly to avoid debt. Think of it like this. If you borrow a friend's sweater, you want to return it in good shape, right? The same principle applies here. So, always borrow wisely and make sure to pay it back on time to maintain a good credit score. A good credit score can help you get better interest rates on loans and even affect your ability to rent an apartment. So, whether you're filling up your car with gas or making a big purchase, remember to use your credit card wisely. Thanks for watching and stay tuned for more tips on managing your finances. Credit cards give you spending power. They are a convenient way to make purchases without carrying cash. You have a credit limit, which is the maximum amount you can borrow. This limit is set by your credit card issuer based on your credit worthiness. Let's say your credit limit is $1,000. This means you can make purchases up to that amount. That means you can spend up to $1,000 using your card. However, it's important to keep track of your spending to avoid maxing out your card. But remember, just because you have a high limit doesn't mean you should spend that much. It's crucial to spend within your means. When you use your credit card, you're essentially borrowing money from the credit card company. And just like when you borrow from a friend, you need to pay it back. The money you spend on your credit card is not free money. And just like when you borrow from a friend, you need to pay it back. If you don't, you could face interest charges and fees. The balance is the amount of money you owe on your card. It's important to regularly check your balance to stay on top of your finances. So, if you spend $200, your balance is $200. This is the amount you need to pay back to the credit card company. Now here's the key. You need to make at least the minimum payment by the due date every month. Missing payments can hurt your credit score. This payment goes towards the money you borrowed. Paying more than the minimum can help you pay off your balance faster and save on interest. Managing your credit card responsibly can help you build a good credit history, which is important for future financial opportunities. So, use your credit card wisely, keep track of your spending, and always pay your bills on time. This way, you can enjoy the benefits of having spending power in your pocket without the stress of debt. Here's where things get a little tricky. Interest rates. An interest rate is a percentage charged on the money you borrow. Think of it like a fee for using the credit card company's money. Let's say your credit card has an interest rate of 18%. This means that if you don't pay your balance in full each month, you'll be charged interest on the remaining amount. So, if you only make the minimum payment, you'll end up paying back more than you originally spent because of the added interest. Section 4. Breaking down the monthly bill. Understanding your monthly credit card bill is crucial for managing your finances effectively. Each month, you'll get a credit card statement, either by mail or digitally. This document is a detailed record of your credit card activity. This statement shows all your transactions, your balance, the minimum payment due, and the due date. It's like a financial report card that helps you keep track of your spending. It's important to review your statement carefully to make sure everything is correct. Look for any unfamiliar charges or errors and report them immediately. Your minimum payment is the smallest amount you need to pay to avoid late fees. However, paying just the minimum can lead to accumulating interest. But here's the thing, paying only the minimum can keep you in debt for a long time because of interest charges. Interest can add up quickly, making it harder to pay off your balance. Always aim to pay as much as you can, ideally the full balance, to save money in the long run. Paying off your balance in full each month helps you avoid interest charges and keeps your credit score healthy. Section 5. A real-life example. Let's say you buy a new pair of shoes for $100 using your credit card. Your credit card has an 18% interest rate. If you only make the minimum payment of $25, you'll be charged interest on the remaining $75. This means you'll end up paying more than $100 for those shoes. But if you pay the full $100 balance by the due date, you won't be charged any interest. You'll have paid the agreed-upon price for those stylish shoes. Section 6. In conclusion, using credit cards wisely. Credit cards can be super helpful, but it's important to use them responsibly. Remember to always pay your bills on time and try to pay more than the minimum payment to avoid those pesky interest charges, and always keep track of your spending. Happy shopping!